In the midst of global concerns about the coronavirus epidemic, climate change continues to be a significant issue in our society today. As a result, sectors of the stock market that contribute to the fight against climate change, such as electric vehicle stocks, continue to prosper. Despite the fact that this channel is mostly focused on Lucid Motors, there are a number of other companies in the energy industry whose stocks are worth keeping an eye on. In today's video, we'll talk about EV stocks, which might be a fantastic pick to diversify your portfolio. Stay tuned for that. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in future videos. Because the car industry is transitioning to electric vehicles, investors may be able to locate lucrative possibilities in the field right now. To begin with, traditional automobile manufacturers such as Ford and General Motors are continuing their shift towards electric vehicles. Meanwhile, growing electric EV vehicle names such as Lucid Motors continue to make headlines. With the electric vehicle market poised to accelerate, one of these companies might be a good investment right now. ChargePoint Holdings Inc. It's a pick-and-shovel play company that helps to accelerate the adoption of electrified vehicles by providing one of the world's largest charging networks. ChargePoint has a strong leadership position in North America and a growing presence in Europe. The company operates under a capital-light business model, with growth being directly proportional to the rapidly increasing penetration of electric vehicles. CHPT stock was trading at $21.24 as of August 27, 2021, representing a gain of more than 120% over the last year. They were in a deal to buy Hastobi, an e-mobility business with a leading European charging software platform. The company made the announcement in July 2021. If specific, the total purchase price for the Hastobi is approximately 250 million euros or $292.78 million, and the transaction is expected to close somewhere in 2021, pending receipt of all necessary regulatory approvals and other conditions. As a result of this acquisition, ChargePoint will be well positioned to benefit from Hastobi's significant European market share, as the company has over 1,000 clients across a wide range of industries. Transactions like these elevate CHPT to the level of valuable stock to have in one's investment portfolio. Fisker Inc. Fisker, an electric vehicle firm situated in California, is the next company on this list. In general, the firm hopes to change the automobile industry by manufacturing one of the most environmentally friendly electric vehicles on the market. It aspires to be the world's leading e-mobility service provider, operating the most environmentally friendly vehicles possible. The stock of FSR is currently trading at $14.04 as of August 27, 2021. Investors appear to have reacted positively to coverage by analysts, hence the stock was trading at $18 a share on August 11, 2021. Analyst has resumed coverage of the electric vehicle manufacturer, giving the stock an overweight rating and a price objective of $40. A new bull case for the stock of $90 has been set by analysts as well. Design, engineering, and supply chain are important aspects of the company's overall strategy to recruit new employees. The company will be one of the few EV-related startups to launch on time with their Ocean vehicle, which is expected to debut in late 2022. Fisker has contracted with Magna International to assist in the production of its vehicles. Nio Inc. Nio is an electric vehicle firm based in China that focuses on the premium smart EV market. In a nutshell, the firm designs and manufactures premium smart electric vehicles, including next-gen innovations in autonomous driving, digital technologies, and batteries. Battery as a Service, developed by the business, is also well known for being the industry's most advanced battery changing technology. The stock of Nio was trading at $38.05 per share as of August 27, 2021. In July 2021, the business issued an update on delivery dates. Taking a deep breath, the company delivered 7,931 automobiles in July 2021, indicating a tremendous year-over-year increase of 124.5%, which is quite significant. The ES6 was responsible for the majority of deliveries in July, which totaled 3,669 units. Also on August 11, 2021, after the market closed, the firm reported very good financial results for the company's second quarter fiscal year 2021. Nio is definitely one of the most watched stocks by investors, and has been an investor favorite for a while as it's been popping up lately and catching headlines. Nio stock can be considered a good investment to add to your portfolio ahead of its future gains. Ford Motor Company. This titan of the automotive business would be known to customers, organizations, and investors all around the world. The corporation would therefore like to keep up with current trends in the industry. As a result, the business is planning on investing $22 billion to add battery EVs into its portfolio by 2025. All of this means that one can now see keen auto investors looking at the F stock among their EV peers. On August 27th, the stock was trading at $13.31 per share. If anything, Ford knows what buyers in the US want. This is obvious because the F-Series is nationally the best-selling vehicle. Ford, of course, still manages to generate news with the electrified F-150 Lightning version of this car. The firm dropped news that it doubled its F-150 Lightning production target. Ford now plans to produce more than 80,000 vehicles a year in 2024, up from 40,000 previously. Overall, it seems like Ford isn't keen to fall behind the EV competition. Similarly, investors who want to jump on the EV trend could flock to F stock. This would appear to be the case given F stock's recent year-to-date gains of almost 52%. Blink Charging Company. Last but certainly not the least, we have Blink Charging, which is a company that specializes in EV charging stations. For the most part, Blink is regarded as a key participant in the industry today. This would be the case given the company's expansive number of charging stations in the United States, which, among other things, are powered by Blink's own cloud-based software. As a result, the BLNK stock would be thrust into the spotlight at this point in time. Is it worthwhile to consider the company's stock, which is presently selling at $31.38 per share as of last trading day on August 27, 2021? Climate change reports and regulations for the most part would place pick-and-shovel plays like Blink stock on the radar of investors looking for value opportunities. Furthermore, the newest news on the White House EV infrastructure plans may be causing BLNK stock to gain traction as well. In particular, 28 Democratic members of the United States House of Representatives are now advocating for $85 billion in funding for EV charging infrastructure. This would represent a significant increase above the existing infrastructure bill's $7.5 billion total budgetary allocation. This definitely makes one stop and think. The conclusion. Stocks in the electric vehicle companies have not performed as well this year as they did in 2020. As an example, Tesla, which is the closest thing in this field to a well-established corporation, had its stock soar by 743% last year, outperforming the market as a whole. However, the stock of Tesla was seen to be basically flat in 2021 compared to a 20% gain for the broader market. Certainly, Tesla isn't the only electric vehicle manufacturer that has struggled to find its groove this year. Investors have taken profits off the table, and cheaper value stocks have regained popularity. This also presents an excellent entry point for new investors to get on board with the EV trend and ride along the gains from the EV industry. The passage of legislation such as the United States Infrastructure Bill is favorable to startup energy industries both in the short and long term. Furthermore, the electrification of vehicles all over the world has elevated the stock to a very hot commodity in the market. It's no surprise that the industry experienced growth last year. Possibly, in the future, we shall witness something similar to this. Even then, when putting together an investment portfolio, one should proceed with caution and conduct extensive research. What are your thoughts? Would you be interested in adding any of the stocks mentioned above to your portfolio? Let us know in the comments section. Because of the 500-mile barrier being broken by Lucid, Elio Herrera believes that Tesla will be in real trouble soon. It was predicted that the industry would come to terms with reality and that the competitors will finally catch up and improve on their technologies. It's better for all of us. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.